Good morning. You are listening to the Perivis Daily Wrap, your quick, clear start to the Indian market day. Coming into trade this morning, the mood is cautious but not fragile. Indian equities gave back some ground yesterday on profit booking, and the next big trigger is close now. The Reserve Bank of India's policy decision is due today, and that is keeping risk-taking in check. Yesterday, the Sensex fell about 0.6% to close at 83,313. The Nifty slipped about 0.5% to 25,642, snapping a three-session winning streak. The sell-off was broad. Only a handful of Sensex stocks finished higher. What stood out was sector leadership on the downside. Capital goods, metals and industrials were among the key drags, while oil and gas was roughly flat. Overnight, the most relevant global cue remains the risk tone around technology, after reports pointed to jitters linked to a broader tech sell-off in international markets. And separately, reports also flagged elevated geopolitical tensions, including U.S Iran related headlines, as part of the risk-off backdrop. For Indian traders today, the RBI outcome is still the main event, but global risk appetite can still affect the opening tone. Now, a quick look at what drove the market yesterday and what may matter for today. Yesterday's trade had a clear pattern. The market started soft and stayed under pressure through the session. The key driver was profit booking after a strong three-day run, with traders also preferring to reduce exposure ahead of the RBI decision. In the Sensex, Trent was a bright spot, rising close to 3%. Tata Steel also gained, and a couple of large financials managed small positives. But the losers list was longer and heavier. Bharti Airtel, ITC and ICICI Bank were among the notable drags, and weakness was visible across several industrial and technology-linked names. In derivatives, the signal was one of caution, not panic. The India VIX eased slightly to around 12, and Nifty February futures ended with a modest premium to spot, suggesting positioning is still orderly heading into policy day. Now turning to key developments since the last market close, starting with trade and policy signals. One ongoing theme is trade diplomacy, and the market is watching how quickly these announcements translate into formal steps. On the India-United States trade arrangement, the agriculture minister has said farmer interests are fully protected, and that major agricultural sectors, including dairy and key crops, have full protection in the agreement. The report also noted the U.S side has spoken about lowering reciprocal tariffs on Indian goods to 18% from 25% and claimed India would move towards reducing tariffs and non-tariff barriers against the U.S. Investors will likely treat this as an evolving story, with details and sequencing still important. Separately, a report said India and the Gulf Cooperation Council are likely to sign terms of reference on February 5th to begin talks on a free trade agreement. That is early stage, but it adds to the broader picture of India pushing multiple trade tracks at once. And on government procurement, the government e-marketplace chief executive has said procurement has crossed 4 lakh crore rupees so far this fiscal year, with a large share of orders going to micro, small and medium enterprises. It is not a single stock trigger, but it is a supportive signal for the broader public procurement pipeline. Now on the corporate side, earnings and corporate actions were the main source of fresh stock-specific risk. Let's focus on the three results that are most likely to move money today. First, Tata Power reported a weaker quarter on the consolidated line. Consolidated net profit fell about 25% year-on-year to roughly 772 crore rupees. And consolidated total income declined close to 10% to about 14,269 crore rupees. The bigger red flag in the release was the standalone print, where the company reported a net loss. Traders will be watching whether the market looks through this or treats it as a near-term reset. Second, Indian Oil delivered a sharp jump in profitability. Consolidated net profit rose more than six-fold to about 13,007 crore rupees, with consolidated income up around 8% to about 2.37 lakh crore rupees. In a tape that has been sensitive to energy and commodity moves, this is a strong earnings headline, and it also helps explain why oil and gas held up better than most sectors yesterday. Third, Tata Motors Passenger Vehicles reported a steep swing into loss on a consolidated basis. The unit posted a consolidated net loss of about 3,486 crore rupees for the quarter compared with a profit a year ago. And consolidated total income fell about 25% to roughly 71,575 crore rupees. That is a big delta, and it puts focus back on execution and demand conditions in the passenger vehicle business. Beyond results, there were a few notable corporate signals that could show up on stock screens today. Coal India's board has approved a major equity infusion for a proposed joint venture with Damodar Valley Corporation aimed at thermal and renewable power projects, including storage. Coal India also approved investment into its subsidiary Bharat Coal Gasification and Chemicals tied to a coal to ammonium nitrate project. The numbers are large and the time frame is multi-year, so the market reaction may come down to capital allocation comfort and project visibility. Uno Minda's board approved setting up an alloy wheels manufacturing facility in Maharashtra with estimated capital expenditure of about 764 crore rupees and capacity plan to ramp in phases through fiscal year 2029-30. This is a clear expansion bet, and investors will weigh growth visibility against the capex cycle. Poonawalla FinCorp raised 500 crore rupees through listed secured non-convertible debentures with maturity in 2036. The key read-through here is funding access and cost, especially with the RBI decision due today. And in pharmaceuticals, Zydus Life Sciences received tentative approval from the U.S Food and Drug Administration for dapagliflozin tablets. The report cited a large reference market size in the United States. As always with tentative approvals, traders will watch the competitive landscape and timing, but it keeps the U.S pipeline narrative active. A couple of smaller items also cross the wires, but are less likely to move the broader market. Devyani International has bought approval to acquire an additional stake in Skygate Hospitality, which would make it a wholly owned subsidiary. And TVS Motor rolled out a new CNG cargo three-wheeler variant in a phased launch across multiple states. Now, the one thing markets will watch today is the RBI. The Reserve Bank of India's interest rate decision is due today. And that matters because it will set the tone not just for banks and rate-sensitive stocks, but also for the rupee, bond yields, and overall risk appetite. Traders will also watch how the market behaves around the policy headline. Yesterday's decline looked like positioning discipline ahead of the event, not a breakdown in sentiment. So the focus will be on follow-through and whether leadership returns to financials, defensives, or high beta cyclicals. Also on the radar are ongoing trade headlines. Reports suggest a joint statement on the first tranche of the India-U.S. trade agreement could be finalized in the coming days. Any clarification on scope, timelines, and sector-specific terms could move exporters and import-sensitive pockets. Before we wrap, here is the takeaway for this morning. Yesterday was a controlled pullback after a short rally, with traders choosing caution ahead of the RBI. Today, the policy decision is the center of gravity, while earnings remain a strong stock-by-stock driver, led by a sharp contrast between Indian oil surge and weakness in Tata Power and Tata Motors passenger vehicles. That is the Perivis Daily Wrap at 7 a.m. Thanks for listening and have a steady trading day ahead.